Hey guys, Dave Pettit, Mortgage Planner, coming to you today. Happy Thursday. Going to dive into part 2 of our discussion on loan option overviews. I appreciate those of you who took a minute out to watch our video last week on low and no down payment programs. Didn't get much mortgage related feedback, but I got a couple comments. One to show a little bit less cleavage, so I buttoned up an extra rung here today, and to shave my beard. So I caved in and it's gone. So anyway, look forward to spending a couple minutes with you guys today. Going to talk today about what your options are if you have a big down payment. So if I have a down payment that's 20% or more, what options do I have? And then we're also going to skip to the next one as well, next topic, and talk about VA loans, veterans, what your options are. There's some pretty cool options out there for vets right now as well. So let's dive in. If I have 20% or more for a down payment, then what are my options? Well, the first place that we would probably look is just a conforming conventional loan. This is a Fannie Mae or a Freddie Mac type loan where you can put down as much as you want, but putting down 20% or more is going to put you in an optimal position to get the best rate available and to get rid of mortgage insurance, to never have to have mortgage insurance for the life of that loan. A couple of requirements for that conforming conventional loan. Typically we're looking at credit scores above 620. We're also looking for conforming loan limits. So for example, nationwide right now, the Fannie Mae conforming loan limit is set at $453,100. That's in 2018, up from $417,000 in 2017. That changes from time to time, and Fannie Mae, of course, sets that. There are what they call high-cost counties, so where I'm at in Utah, Salt Lake County. Salt Lake County is considered a high-cost area, and the conforming loan limit is raised to $600,300. And that would take us, because that's over the $453,100, that would take us into a high balance loan is what that's called. High balance loan, essentially the same rules and regulations as a conforming loan, just a little bit higher rate typically because there's a little bit more risk associated with that. Now the term, it can be anywhere from 1 year to 30 years or anywhere in between. Typically you're going to see a 15-year loan, a 10-year loan, a 20-year loan, maybe a 25, or most popular would be your 30-year fixed rate mortgage. An adjustable rate mortgage can also be a conforming conventional loan. Those are eligible and allowed to be conforming conventional loans as well. I put FHA and VA on here because it's a little bit of a misnomer that you can't put down 20% and get an FHA or a VA loan. You certainly can. It's not always going to be the most advantageous, but it can be in some scenarios. Say, for example, VA rates are really low, and even though there's a funding fee, if I put down 20%, the funding fee goes down drastically from what it would be if you put down $0. So for your veterans, we'll talk a little bit more about VA loans and when that might be a good option, good idea to go that route. FHA, if you've got a more credit challenged borrower, it might not make sense to take a really high rate on a conforming loan. Rather, it might make sense to take a little bit better rate with mortgage insurance for an interim period of time on an FHA loan. So that's just something that's very, very case by case. We're just kind of showing you all of the options that might be available. Say I don't fit inside of the box. I'm a non-conforming option, meaning that I have maybe a jumbo loan that I want to do at $1 million. Well, there are lots of options for those. They're typically going to require a 20% down payment's fairly common, but we've got options for as little as 5% down on those jumbo loans, even up to $4 million. So there's some good jumbo loans out there for those who don't fit inside of that kind of more vanilla box of a conforming loan with their loan limits and things that they require. Bank statement. Maybe I'm self-employed and I write off everything, right? But I do have a good income stream into my business. There are certain programs out there. Now these are going to be a little bit higher rate because it's a little bit riskier, deemed a little bit more risky. But there are options where we could take 12 months or 24 months in bank statements. And we'll get into these options in a little bit more detail later.
There are stated loans that are reemerging into the market. Now these, again, a little bit higher rate, a little bit more down payment required, typically in the 30 to 35% ballpark. And right now, from everything that I've seen, they're only for investment properties. These are not for owner-occupied properties, whereas the bank statement program, you could certainly do that on an owner-occupied property. And grants. We get asked sometimes, if I'm going to put down a big chunk of money, could I still be eligible for a grant? Well, a scenario might be, I don't make a lot of money, I might income qualify for a grant, but I just got an inheritance and I want to use that $50,000 to put down on my house whenever I purchase, so for a down payment. Well, certainly there are grants that you might qualify for in that instance. Let's just spend a couple minutes talking about VA loans here. VA loans, of course, you've got to be an eligible veteran. You have to have hit your eligibility mark of service. And a VA loan does have a funding fee. And the only time you'd be exempt from that funding fee is if you have some kind of disability associated with your service. Then the VA usually exempts you from a funding fee. There is no annual renewal fee like USDA, no mortgage insurance like an FHA loan. It's just a one-time funding fee. And I put this grid here to kind of give you an idea of, hey, maybe I was in the National Guard. I'm not going to put anything down, and I've already used my VA once before. My funding fee would be as high as it goes at 3.3%. Or maybe I've never used my VA, and I'm going to put down 10% or more, and I'll have a premium, an upfront premium of 1.25%. What happens with these premiums is they are financed into the loan, and it's not something you have to come out of pocket with, no cash or anything like that. It just becomes a part of your total loan amount, okay? And then grants, there are also some pretty cool options for veterans when it comes to grants and other incentives. Now, they kind of vary from time to time. Right now, the state of Utah has an awesome grant program through the State Housing Authority, up to $2,500 for eligible veterans. So make sure you ask us if you think that might fit your specific scenario.
Once again, just want to say thanks for spending a few minutes with us today. I sure appreciate your time. Hopefully this has been informative for you. Please feel free to reach out with any questions along the way. Please like, comment, share, subscribe to our pages. You can catch us at Dave Pettit Mortgage Planner or www.mtg-planner.com. Thanks, guys, and have a great day.